As the world's second largest economy in terms of nominal GDP and first largest in purchasing power parity, China has long been seen as a global powerhouse. Throughout the 1990s and 2000s, China's economy grew at an estimated 10% per year, which helped China become the fastest-growing major nation in the world. However, the economy has been going through a significant downturn in recent years. Join us as we discuss the depths of the Chinese economic downturn, uncovering the hidden factors driving the decline and contemplating the impact it may have on the world's financial landscape. This decline in China's GDP growth rate is primarily due to trade tensions with the United States, the effects of the COVID-19 pandemic, and the slowing down of the Chinese domestic economy due to an aging population. To fully comprehend the complexity of the Chinese economy, it's crucial to examine indicators such as GDP and GDP growth rate. According to data from the World Bank, China's GDP was approximately $18 trillion in 2022. That is a remarkable achievement, considering China's GDP was only $1.4 trillion in 2000. However, in recent years, China's GDP growth rate has been on a downward trend, dropping from a peak of 6.95% in 2018 to less than 3% in 2022. In fact, many experts believe the Chinese economy might have purged by 1% to 2% in 2022. The Chinese government has shifted its focus from GDP growth to the quality of life and sustainability, which has led to a lower GDP growth rate. When compared to other major global economies, China's economic performance is mixed. On one hand, its GDP is significantly larger than other emerging markets such as India and Brazil. As of 2022, China's GDP was approximately $18.321 trillion, making it the second largest economy in the world behind the United States. On the other hand, its GDP per capita is still relatively low compared to developed economies like the United States and Japan. As of December 2022, China's GDP per capita was around $12,000, which is lower than that of the United States, $62,794, and Japan, $39,285. This is primarily because China has a large population, which dilutes the GDP per capita. Additionally, China's income distribution is highly unequal, with a significant portion of the population still living in poverty. Another factor contributing to China's economic decline is the country's slowing population growth. With an aging population and a declining birth rate, fewer people are entering the workforce and consuming goods and services. This has led to decreased domestic demand and a slower rate of economic growth. China is aging fast. In 1978, the median age of a Chinese citizen was 21.5 years. But as of 2023, it has risen to around 39, surpassing that of the United States. The demographic shift is largely a result of the one-child policy that was in place in China from 1979 to 2015. This policy limited the number of children that families could have, resulting in a decrease in the overall birth rate. Additionally, improvements in healthcare and living standards have led to an increase in life expectancy, contributing to an aging population. The aging of China's population is likely to have significant economic and social implications. The working-age population will shrink, potentially leading to a decrease in productivity and economic growth. Additionally, the country will have to contend with the financial burden of caring for an aging population, including providing for their healthcare and retirement needs. Another concern for CCP is the ever-increasing debt. It is forecasted that the amount of new debt will reach a record high of over 4 trillion yuan, $570 billion, in the current year. This indicates a significant increase in borrowing and could potentially have implications on the overall economy. It is important to monitor the situation and understand the reasons for this increase in debt. China has been investing heavily in infrastructure and real estate, leading to a rapid increase in debt. This has made it more difficult for the government to continue stimulating economic growth through increased spending. Furthermore, China's economy is heavily reliant on exports, and a slowdown in global economic growth has also affected China's exports. The COVID-19 pandemic has further exacerbated this issue, as many countries have seen a decrease in economic activity. An important industry in China is the service sector, which includes areas such as finance, transportation, and healthcare. In December 2022, the service sector accounted for approximately 48% of China's GDP, which is lower than the 54% it accounted for in 2020. The service sector is still an important contributor to China's economy, despite the decline in GDP contribution. The service sector has been facing challenges due to the ongoing trade tensions with the United States, the COVID-19 pandemic, and the slowing down of the Chinese domestic economy. These challenges have led to a decline in foreign investment and tourism, which have negatively impacted the service sector. One major factor creating so much volatility for the market is the ongoing trade war with the United States. The tariffs imposed by the U.S. on Chinese goods have led to decreased exports and decreased demand for Chinese products. Additionally, the trade war has led to increased uncertainty for businesses, making it harder for them to plan and invest in the future. Domestic factors are also playing a role in the economic decline. China's population is aging, and the country's urbanization rate has slowed down, both of which can lead to a decrease in economic growth. Government policies and regulations, such as the Made in China 2025 plan, which aims to increase the country's competitiveness in high-tech industries, may have led to overinvestment and debt in certain sectors. The economic decline is also having an impact on global trade and international relations. Countries that rely on Chinese imports and exports may see a decrease in their economic growth. Additionally, tensions between China and other countries may rise as a result of the economic downturn. The decline in Chinese economic growth is also likely to have an impact on other emerging markets that have close economic ties with China. Countries such as South Korea, Taiwan, and Vietnam that rely heavily on exports to China may see a decline in their economic growth. In addition to the economic impacts, the decline in China's economy may also have political and strategic implications. As countries compete for resources and market share in a slower-growing global economy, tensions between nations may rise. In the short term, the decline in China's economy may also lead to a decrease in foreign investment as investors become more cautious about the economic outlook in China. This could lead to a further slowdown in the country's economic growth and increased uncertainty for businesses. Finally, the economic decline in China may have ripple effects on other economies and financial markets. As China is a major player in the global economy, any downturn in the country can lead to decreased demand for goods and services from other countries. Additionally, a decrease in Chinese investment in other countries can lead to decreased economic growth in those countries as well. Furthermore, the economic decline in China may also lead to a decrease in the value of the Chinese currency, the renminbi, RMB. As investors become less confident in the Chinese economy, they may sell off RMB-denominated assets, leading to a depreciation of the currency. This can have a knock-on effect on other currencies, particularly those of countries that have close economic ties with China, as it could make their exports more expensive and less competitive in the global market. In summary, the economic decline in China may have ripple effects on other economies and financial markets through decreased demand for goods and services, decreased economic growth in other countries, a decrease in the value of the RMB, a decrease in the value of global stock markets, and a decrease in the prices of commodities. To conclude, the Chinese economy is currently facing a significant economic downturn. The consequences of this economic decline are far-reaching, affecting not only the Chinese people, but also global trade and other economies. It's important to note that the Chinese government is taking steps to address these issues, such as implementing stimulus measures and promoting domestic consumption. However, it's uncertain how effective these measures will be in reversing the economic decline. In the end, it's clear that the Chinese economy is facing significant challenges, but it's also important to remember that the country has a long history of economic growth and resilience. While the future may be uncertain, there's no doubt that China will continue to play a major role in the global economy. As the world's second largest economy in terms of nominal GDP and first largest in purchasing power parity, China has long been seen as a global powerhouse. Throughout the 1990s and